Thank you so much, David, and it's a pleasure to be here. A year ago today, I had the opportunity of speaking here, and I spoke about what was happening in the apartment market in 2013 and kind of where it was going in 2014. And I went back and looked at my remarks, and I said that in 2013, the apartment market had everything going for it, with increasing interest, increasing rents, increasing income, low vacancies, low interest rates, stable vacancies, wonderful financing, and an improving economy. In addition, there was strong investor demand. Now, I could basically repeat everything I said last year because 2014, the apartment market had everything going for it. Today, I'd like to talk about what I consider some of the major trends impacting the apartment market in 2014, and then give you some of my thoughts where the market's going in 2015. Specific topics will include apartment construction, vacancies, expenses, apartment values, income, cap rates, and what's happening with apartment sales and apartment volume. But before I get into that part of the remarks, I'd like to talk about some big overview pictures of things going on in the economy. And I think two of the biggest surprises of 2014 were what happened with interest rates and also what happened with the economy. Now, a year ago, AAA bonds were about 4.5%. Today, they're about 100 basis points lower, or 3.5%. In addition, looking at treasuries, a year ago, they were about 2.7%, and today they're about 2.1%. So no one expected that interest rates would show the kind of decline that we saw in 2014 and into year-to-date 2015. And needless to say, it has a huge impact on the apartment market. As far as the U.S. economy, a year ago, we were at 6.7% unemployment rate. Today, we're closer to 5.6%. A year ago, in 2013, we had 200,000 jobs per month we were adding. And in 2014, we added about 260,000 jobs per month. So, and the December 2014, the January 2015 figures show an average of about 300,000 jobs the last 2 months. So certainly a strong economy, a lot of momentum, and big improvements. Some of the specifics include oil going from about $100 a barrel down to about $50, housing prices up, stock market at record highs, good consumer confidence, high individual net worth, auto sales up, GDP just under 3%, and housing no longer a drag on the economy. So much for the national market. What about Portland? Well, a year ago, Portland Metro unemployment was about 6.8. Today it's closer to 6.4%, which is based on the December figures. I see the January figures just came out for the state today and shows quite a drop. Now, a year ago, we had added about 16,000 jobs in the metro area in 2013. 2014 was closer to 27,000 jobs. Now, you can see here from the chart that the economy kind of peaked out in 2007, 2008, dropped down, we lost about 82,000 jobs, and we've recovered all of those 82,000 jobs plus about another 32,000 jobs. So finally, Portland Metro is getting some traction on the economy. ULI had their year-end meeting here in Portland and also issued a report. This year they ranked Portland as the 16th strongest market in the nation versus 19th last year. They had Houston and Austin and San Francisco at the top, and then places like Detroit and Milwaukee down at the bottom. So what's happening here in Portland Metro as of early 2015? Certainly Nike is on all cylinders. We've had strong expansion out of Intel. And it's kind of interesting. out at Intel, there's been a lot of apartment construction, but recently, just in the last 60 days or so, a major $44 million project was announced. We also have the light rail construction out of Milwaukee. I think that's going to have a big impact in that area. The bad news is what happened at the Port of Portland and with Hanjot actually leaving the area. There's a lot to shake out. It's pretty early news, but we'll see what kind of impact that has. Okay, another ratio I follow closely is what's happening with home ownership. And it's so important in the apartment market, that ratio of home ownership to renters, because it had such a huge impact on demand. And if we look at the national figures, a year ago, nationally, we were about 65% home ownership ratio. This year, we're closer to 64%. So it's continued to slip. The next slide here is put out by the Census Bureau, and it shows the home ownership ratio in the U.S. by quarter. And what's interesting is the home ownership rate at the end of 2013 was about 65, a little over that, and it went up to it's gone down to 64% as of the fourth quarter of 2014. So strong demand, not only from things going on in the economy and household formation, but also from that changing ratio. Portland Metro, the figures are a little tougher to come by. The Census Bureau put this out by quarter, but they tend to jump around a lot, which surprises me. But if you average 2014, you have about 60% home ownership rate in Portland Metro, and it was 61% last year. So again, if you're an apartment owner, it's going in the right direction. So now, one thing about the apartment market everyone is talking about is what's happening with apartment construction. And you drive around, you see the cranes, you see the buildings coming out of the ground, and you wonder, gee, how is this going to impact the apartment market? Well, there's probably no one that knows more about apartment construction than Patrick Berry, and I'd now like to turn things over to him for his remarks.
So it's nothing new to anyone. It's nothing new to anyone in this room that the apartment construction cycle is in full stride. This chart here shows the monthly permits for the 4-county metro area. Last year, 2013, we had about 5,800 units. 2014, we added another 1,000 and brought us up to about 600 to 800 new units for the year. If you look at 2009, we were at 1,000, so we've had a huge recovery from 2009. But I think it's worth taking a long-term perspective look at what 600 to 800 units is. I looked back to the mid-70s, and our peak year was actually 1997, when we had permits for 7,900 units. So we're up there, but we're not at those record levels yet. I also looked at the counties, because I think this is a little more telling. This is the 4-county metro area, permits back to 1990. Multnomah County often leads the way in construction, accounting this year for 60% of the new construction. But the thing that's a little different is the volume. Multnomah County issued permits for 4,200 new units. I looked back again to the mid-70s to see what the record was, and it was 3,300 new units back in 2003. So this is by far the busiest year ever for Multnomah County apartment construction. These numbers are a bit outdated. I just looked at them before I came down here. And I'm seeing right now there's about 10,000 units that have been completed in the past 24 months, about 9,000 under construction, and about 17,000 proposed. It's worth explaining where I get my numbers from. These are all from the public records, from the permit applications. So by the time someone's filed for a permit, typically there's been a land acquisition, they've hired an architect, an engineer, a feasibility study, they've sunk a lot of money in. So there's a very good chance that by the time it hits the public permits, it will get built. just to show you really the concentration of units in the urban core, I think this is a pretty good map here. If you took a circle, drew it about 3 miles around the Burnside Bridge, you'd encompass probably 70% of the units in Portland. When I look at this, there's some major corridors that jump out to me. One is the Williams Corridor, the Burnside Bridgehead, Pearl and Northwest Portland, any Southeast Portland arterial. South Waterfront, Macadam, and then out to Washington County, right around Orenco, and then kind of in the general vicinity of Nike. But you'll also notice that's in areas with virtually no activity. You look at Clackamas County, there's almost nothing happening in Clackamas County. Very little east of 60th Avenue, and even less east of 205. You look in outer Northeast and outer North Portland, outside of a few kind of hot corridors, there's really not much going on. And then not much in Southwest Multnomah County or in close-in Washington County. That includes Tigard, Raleigh Hills, East Beaverton, Multnomah Village area. Now I pulled a few kind of the example projects going on. There's quite a few large projects. You have 281 units in the Pearl, 165 units up in St. John, 579 out in Hillsborough. But there's also countless infill projects that are a lot more difficult to track. A few examples of these is 29 units in North Portland. There's the 56 micro units in Northwest Portland, 12 units over in Southeast. I'm going to focus on these smaller infill projects a little bit. Most of the time, these projects don't make the news. They're usually maybe 6 to 20 units. Some of them are built on vacant land, but more often than not, they're built on land that's being targeted by developers that's high density zoning below the improvements. The improvements are often underutilized. I went back to Google Street View. You can go back in time and see what things looked like years ago. The top pictures are from 2012. And these were, well-maintained single-family developments that a developer came in, paid full price for the single-family house, immediately tore it down and built apartments. And we're also seeing a lot of what I kind of deem alternative developments right now. With apartments being in such high demand, this allows developers to get units on the market quicker. Everyone's heard about the micro units with the private bathrooms but the shared kitchens. But recently we saw a proposed project that actually had a shared kitchen and a shared bathroom. Over in close-in Northeast, there's a motel that's being converted to studio units. On some of these larger projects, the garden projects that are not developed to their highest density, the owners are actually adding freestanding units on these buildings to bring them up closer to maximum density. There's an office building over on 56th and Burnside that's being converted into a 14-unit apartment. And probably the one we see the most is adding units within the building shell itself. The bottom permit's actually adding 5 studios in the basement and 2 units on the first floor. A lot of these older buildings have huge spaces in the basement that are often underutilized. And they've taken out the boiler, they've taken out this tenant storage, and they're putting in units. One developer I thought summed it up pretty well. He said, in this market, anything works. And I think this is a pretty good example of that. And with that, I'll turn it back over to my father.
Thank you, Patrick. Bear with me here. Okay, so I am so impressed with the job Patrick does on apartment construction. He actually writes a report called the Barry Apartment Construction Report and has detailed information. And if anyone wants to know what's in the pipeline, it's really a good place to look. So we've had all this apartment construction. We've had a good economy. What's happened with apartment vacancies? Well, if we look at the national figures, we see that they moved up just a little bit, but about 4.2%. And very much the same trend in Portland. It kind of went up during the recession, it went down considerably, and it's just come up a little bit. So what about Portland Metro? Well, there are all kinds. Can you hear me okay? Just a little. Okay. There are all kinds. We gotta switch this. Okay, is that better?
Yes.
Okay, good. There are all kinds of apartment vacancy surveys out there. And basically, they all say our apartment vacancy rate is somewhere between 2.5% and 4.5%. And the big reason for the discrepancy is how do you count for vacant units maybe that haven't had time to stabilize, or how do you count for vacant units that are rented but are unoccupied waiting for the tenant to move in. This is a report that I've been involved with for probably 10 years with the Multifamily Northwest organization, and I put a lot of credence in the vacancy figures they have because I know how detailed they are. Basically, their last report said that we were about 3.8% apartment vacancy. Certainly a low vacancy rate and still a landlord's market. But what it's telling us is that vacancies have crept up a little bit. They were about 3.5% from the previous survey. Now, this survey covers 20 different submarkets, and the vacancy rate actually crept up a little bit in 11 of those 20 markets and went down in 9 of the 20 markets. However, 18 of the 20 markets showed apartment vacancies at 5% or below. So the lowest vacancies were out in Lake Oswego, West Lynn, and out in Gresham, Troutdale, Fairview, and in Inner Southeast. The highest vacancies were actually downtown and in Northwest Portland. I think the biggest surprise of this survey was that it showed apartment vacancies were at 6.5% in Northwest Portland, which quite frankly surprised me. And I think it had to do with how some of the new units were accounted for, because it certainly has not been my experience. And I think it caught a lot of people off guard. I think the vacancies are concentrated in the newer units. They're also concentrated in studio units, which are showing the highest vacancies, as well as 2-bedroom, 2-baths. Now, obviously, there's been a lot of apartment construction, and the bulk of it has been in the urban area. Northwest Portland, downtown, close in Southwest, and close in East Side. So if you take those 4 submarkets, this survey covered about 12,000 units, and basically what it showed was that apartment vacancies went up about 125 basis points in the last 6 months. So what it's telling us is that the apartment market's getting a little more competitive with all these new units coming online. So despite an uptick in apartment vacancies, for the most part, it's clearly a landlord's market. So what's happened with rents? Well, if you take the Multifamily Northwest figures and you figure the average rent per square foot, you compare it to a year ago, they say that rents are up about 11%. Quite frankly, I don't believe it. And the main reason is that the sample size from the 2 surveys was different on the rent per square foot. You had more newer units. And so in my travels, I put a lot more weight in what's happening on the income rather than rents. And most of the projects I work on, rents have been up somewhere in that, I would say a minimum 3% over the last year, and maybe a maximum of 6%, unless there was some kind of major rehab. Rents are highest in the downtown area and lowest out in outer Northeast Portland and West Vancouver. In looking at the rents from the Metro Multifamily Northwest survey, basically rents were up in 17 of the markets, were flat in 2 of the markets, and were down slightly in one of the markets in Southwest Portland. So are concessions out there? I think the simple answer is yes and no. If you go on Craigslist, I just went over the weekend and kind of picked out some of the different concessions, and also went to the Mill Creek open house over the weekend. They're offering concessions, but what they're really trying to do is get the property rapidly filled up. And you're much better off with, say, a 3-month fill-up than a 6-month fill-up, and giving a little to get people in the door. particularly in the winter when people are less reluctant to move. Some of the concessions I consider really no concessions at all, like free bike storage. You got free yoga twice a week. Extra $500 off the move-in. That's basically your security deposit. 300 cash rebate. Come on. So the concessions, for the most part, are very limited. In my travels, I never see concessions except maybe used as a ploy for newer projects to get them rapidly filled up. On the utility bill back, that's rapidly kind of taken hold, particularly with it being a landlord's market. And I would say about half the properties I work on have a utility bill back. We're also seeing landlords being a little more aggressive in different types of fees, whether it's a parking income. All of a sudden in the suburbs, I'm seeing them charge for a second car. I'm seeing some pet rent, which has actually been around for a while. You've got storage rent, you've got, and recently a new one has kind of been bike rent. So what about the expense side? The expense side, for the most part, has been pretty stable. The city of Portland got hit hard in last year's taxes was up about 10.5%. This year it was closer to 2.5%. I went to some of the other areas and kind of looked at what's happening with property taxes, and in particular Gresham, Beaverton, Milwaukee, Westland, Tualatin, and Vancouver. And basically these markets all showed increases, kind of the low side, maybe 2.5%, high side 4.5%. But the thing you got to watch is out East County with the compression. Some of those values went down so much and the assessment went down. What's happened is, as that market improves, you're seeing huge jumps out in East County, and some in the range of maybe 15 to 25%, which is a pretty big hit. Now, the property tax situations all of a sudden come under a lot of scrutiny, and there's been a lot of articles recently. I think it's going to be a tough hoe to change it, but there are tremendous inequities in the current property tax system, in that like properties pay completely different tax rates and properties of like value based on where they are and where they were in the cycle when the tax limitation measure went into effect. Other expenses have also been fairly stable. You know, utilities, it's always a battle, but it seems to be $100, $80 to $100 per unit per month is the new norm for apartments. The insurance has been stable. Repair and maintenance has also been stable, mainly because with the hot apartment market, tenants have been less likely to move, so they tend to stay put a little longer. So some of those expenses have gone down. Advertising is virtually non-existent. Oil, of course, oil prices have gone down, but there's very little oil being used anymore. And internet, Wi-Fi seems to be, we're seeing a lot more of it, and that's also been stable. Okay, so much on expenses. What's happening with apartment sales? What kind of year was 2014? Well, 2014 was a pretty good year for apartment brokers and for sales. If we go back to during when times were really good, we were doing about 250 sales per year average. You can see it dropped, and then we got into the recession, and to say it dropped was an understatement. The market just fell apart. We went from about an average of about 950 million per year to down to about 275 million, or about a 70% drop. So things really collapsed. 2014 wasn't a record year for apartment transactions, but it was a record year for apartment sales volume. And the reason is, as I'll be explaining shortly, apartment values have moved up enough that with the higher prices, it's resulted in a record year for volume in 2014. It was right around 1.4 billion, and this is about 45% above the previous year. And the transactions were up about 13%, so still a good year for apartment brokers and apartment transactions activity. What about apartment values? Well, what's happening in Portland is the same thing that's happening different places across the nation, and that is that values have moved up. You've had a lot of capital chasing money, you've had low interest rates, you've had an improving economy. So you can see here, this compares what's happened with apartment values nationwide, and we're pretty close to the peak here. The green line is apartments, the blue line is housing prices. You can see housing prices are about 11% below the peak, and apartments are right about at the peak. So certainly what's going on is we've had increasing rents, low vacancies, low interest rates, a lot of money chasing product. And so in the US, apartment values are up about 50%. So what about Portland Metro? Well, there are a lot of value indicators out there. I like to look at the price per square foot. And you can see here some of the same trends happen in Portland as happen throughout the nation. And that is that apartment values moved up until the recession, they went down, and they've gradually been coming back. What's interesting is 2014 was such a strong year for apartment values, and any broker can tell you that. But what I find interesting is kind of what happened throughout the year, because I think it caught people by surprise. If you look at the price per square foot by quarter, you can see here that the first and second quarter of the year were fairly flat, but a lot of the increased activity happened the second half of the year. And I attribute that again to some of the decline in interest rates and also the economy really getting some traction in the second half. If you look at a couple other indicators, say the average price per unit, again, you can see it confirms the price per square foot. Also, if you look at cap rates, you can see cap rates are kind of down at a record low there. And the median cap rate is somewhere around 5.5%. And so values have been exceptionally strong. But, so now that's the entire Portland metro area. That's every sale of every apartment throughout this whole period. But what's happened on some of the submarkets? And I'd like to go through 4 submarkets and kind of talk about individually some things that have happened here. And the first is for new units. And we've seen all this apartment construction. A lot of these properties are built for sale. And so it was hard a year ago, year and a half ago, 2 years ago, for appraisers to do the appraisals on these things because there were so few sales. Now there are a lot of sales and that market is pretty well defined. So we kind of know where we are. You can see here, if you take newer apartments, that it's been quite a jump in values this last year. 2 particular properties, I think this is the one that Mr. Diamond sold, and this is the second one out at 66th and Holgate. But it kind of shows you some of the smaller properties that have sold in the coastal area. The second market I'd like to talk about is older units in the urban area. And this is the place where it seems like everyone wants to be. You want to be in the urban area, you want the nice, cute, single level brick building out in southeast or northeast. And so you get a lot of people chasing this kind of product. You can see here that the cap rates were pretty steady and have taken quite a drop in 2014. 2 particular sales is this one just closed in February at about 112 a unit over in coast and southeast. And the second one is just right down the street here downtown and closed at about 125,000 units. The third market I'd like to talk about is not as strong as the others, and that is suburban product built from 1960 to 1980. And the reason I picked 1960 to 1980 is these were the boom years for apartment construction, when the whole modern garden apartment kind of took off. And I purposely excluded Multnomah County, because Multnomah County has been a little stronger than some of the other counties. So basically, these figures cover Clackamas, Washington, and Clark. And so this market got hit pretty hard during the recession. Values went down. They didn't really recover until just recently. But 2014 was strong for this market in the suburbs. And it was a long time in coming. And so you can see that apartment values, they went up in 2014, but they're still below where they were at the peak. In looking at the sales by quarter, I can't help but notice that the third and fourth quarter, like the rest of the market, was very strong. So values were moving up throughout the year and clearly an upward trend. A couple sales. This was one recently out at PCC, Rock Creek, for about 90 a unit. And the second one was a smaller property not far from Washington Square at about 94,000 a unit. So the final market I'd like to talk about is a market that I do a lot of work in, and I love working it, and that is East County. And so what I did was I took all the zip codes in East County and basically went from 122nd all the way out to the Gresham city limits. And this is an area that has a lot of homogeneous product. There's been some things going on out there, particularly Rockwood, where it's kind of taken a bad rap, and along the light rail. And so this was a slow market to come back. And you can see here that this market, it got hit pretty hard in 2010, but it's gradually increased. And what really surprised me was how strong 2014 was for East County. And you can see that values have all of a sudden jumped up, and again, like some of the other markets, are at a record high. And I attribute this to the fact that there's so little product available. East County, maybe there's not quite the longevity in terms of ownership. They tend to turn over a little more, but it seems like this is an area where investors have had an option if they wanted to go and buy product. So there seems to be more product up there. The market has been very strong in East County, and quite frankly, it surprised me how strong 2014 was out there. Okay, I'd like to just show you a couple sales. This was actually an REO appraisal, and this must have been the day that the market bottomed out. Because here it was just a little over 3 years ago, and here you had a newer property, all 3 bedrooms, sold for under $50,000 a unit and $51 a foot. So, and it's just unheard of, but it shows you how hard that market got hit. One thing I didn't tell you was that the bank that foreclosed, they made a little mistake, and there were 2 tax lots to encumber on their deed of trust. Well, they only got one of them, so they missed the parking lot. So that might have been one of the reasons that the property had problems. Okay, this is a little more kind of generic, typical stuff that's selling out there right now at 77 a unit. And I think anyone working in the brokerage field kind of scratches their head and say, my God, has this market increased this fast in such a short time? But certainly there's a lot of sales activity out there. The second property is on 132nd Division and sold for right around 74,000 a unit. But it wasn't that long ago that this stuff was selling for 50 and 60 a unit, and I mean there wasn't anything over 60 a unit in East County. So a lot of big changes. Okay, so much for some of the things, some of the sales activity. I'd like to just kind of point out a couple things I see going on in the market before I sort of get into the thoughts on where we're going this next year. First of all, value-added sales. As an appraiser, you go out and you try to do the sale and you get the cap rate and you get the multiplier and all this. The problem appraisers are having, and anyone's having, is that everyone's buying on value-added. And they look at the property and they say, I'm buying this not because the rents are $800, because I can do a little work and get them up to $900 or $1,000 or whatever. And these are a couple owners that I've done some work with. I just kind of wanted to show you what they're doing. This happens to be a 60s garden apartment close in Southeast. But they've gone in and they probably paid 80 or 90 a unit for it. The rents used to be somewhere in the maybe $795. they've gone in, put in hardwood floors, two-tone paint, new windows, window covering, new appliances, microwave, new cabinets, and really detailed it out so it looks sharp. But all of a sudden, here you have a one-bedroom renting for almost $1,200, which just was unheard of a couple years ago. Okay, the next property is another kind of rehabber, and I did the appraisal. They were halfway through. This was one they hadn't done. This was the one they had done. You can see the hardwood floors and the two-tone paint, the fan, and unfortunately, the rents have moved up so much that these people don't have a whole lot of options, and with regret, sometimes they get pushed out to areas that they really didn't want to be because it's too tough to kind of afford some of the apartments in their area. Okay, a couple other changes going on in the market. Anyone who's been down to that Conway area, my goodness, it's happening fast down there with the apartments and the micro brew pubs and all the things going on. So we're seeing a lot of changes in the Conway area in Northwest Portland. Another thing, a trend I've seen is that retail at ground level in many areas hasn't worked. And the city has pushed that, particularly in the CS zone, that they want to have mixed use, but unless you're on the right traffic pattern, you're going to struggle. And a lot of people have regretted putting those in, and they have been, in many cases, slow to fill up. We've done more than one appraisal of a new property that had ground floor retail and commercial, but it didn't work, so they actually converted that to apartments. Another kind of big topic in the market is, where is the next hot area? You know, it caught people by surprise about Division, that took off so fast. I think some of the things I see going on is that people now are kind of looking out east of 39th and west of 42nd in, say, Mount Tabor and Powhurst and even the Lents and some of these neighborhoods. We're working on a property out there not that far from Powell that's selling at $93,000 a unit, which quite frankly, was just wasn't happening recently. Also, I think with the light rail going down to Milwaukee, it's just a hop, skip, and a jump down to get to downtown Milwaukee, and I think we're going to see some more activity there, and once they get some synergy. Another trend I'm seeing is Wi-Fi being put in a lot of properties, fairly inexpensive, somewhere around $3 to $5 per unit per month, a big hit for people that they don't have to get their own Wi-Fi. Another trend I'm seeing is that if you look at who the major buyers here are in Portland, two of them are TIA, CREF, and Security Properties. And they have accounted for 24% of the sales volume of apartments. Now, these are New York companies, they're big investment companies, but what they really are representatives of people like you and me, in that they take individual accounts and you can invest in them. Anyone that wants to be a part owner of some of the largest apartment complexes in Portland can do it this afternoon. All you got to do is go down to your account here with your brokerage company or stockbroker, and you can invest in these companies. And you can see here that the return for 2014 was about 11%. It's been about 5% over the last 10 years, and the last 5 years somewhere around 11%. So basically, there are people like us who don't want to put their money in a money market or a CD or short-term treasury because you're not getting yield, and all of a sudden 5% looks pretty good, and they've actually done quite a bit better than that. Another trend I'm seeing is unpriced apartments. They'll put it out there, there's no price, just the market's been strong enough. I'm glad brokers are doing this because they're having trouble figuring out where values are, and it's the same problem I've had. So you're seeing quite a few properties go in the market. It doesn't have a price. Another trend we're seeing, and it hasn't really taken off, but it surprised me a couple projects we've worked on, and that is where you ask what the turnover rents are, and they vary daily. And I guess there's a company that has algorithms kind of like the airlines, where they price their units based on their occupancy rate and things going on in the market. And if you don't have any vacancies, I guess they push the market. If you got a lot of vacancies and stuff coming up, but you put in all these parameters, and the price changes daily. And we'll see if this catches on. It's pretty new, but some big time companies and management companies are starting to use that. Okay, another trend I think we're going to see is the city of Portland getting a lot tougher on the development standards. In particular, I'm not sure you want to go in and try to get a variance these days. If everything complies with the code, you should be in good shape. But Amanda Fritz has taken over, and there's been, in 2013, 2014, a lot of discontent in the neighborhoods, in particular with the parking situation and the density, and in particular areas like Division. So she recently, and this got a lot of press on Oregon Live and in Oregonian, but basically she's instructed her staff to kind of maybe rein it in a little bit on some of these projects and maybe look at some of the impact on the neighborhoods. I noticed that one of the brokers here mentioned they're working a certain property and they're going in for a zone change, and that all of a sudden they're getting a lot more pushback on some of the changes with the Bureau of Development there. Okay, another thing that Patrick kind of mentioned is that you're seeing a lot of new units come on, but they're not built in new apartment buildings. Instead, they're finding reuse. And this was just announced this last week, and it's a building that I believe it's right out by the old hospital. I believe it was some kind of dormitory for nurses. So basically, someone's coming in, and this old building, underutilized, and now they're converted to apartments. But we're seeing lots of this, and we're seeing units being added in buildings. We're seeing people try to buy, say, a single-level building that allows higher density under the code, and then go up. We're seeing, Patrick mentioned some motels converted to apartments. We've got the Arthur Hotel downtown, which they converted to apartments. We've had some dormitories. So people are looking for any way they can to add units. And I'm surprised the number of properties that are underutilized, particularly some of the basement space, that have the zoning. So basically, you have no land costs and no envelope costs. So people are trying to put the units in there. Another trend is the micro units. Pretty new to Portland. Now, we've got the property out on Thurman, which should be opening shortly, and then another one out in the Hollywood neighborhood. There are probably a few more that are coming out. Now, keep in mind that a garage is typically 10 by 20. So some of these are under 200 square feet, and it's a little tight. Certainly, they do a lot of things there to kind of make it livable. There's a guy named Troy Park that's also done a lot of kind of micro units and has done a remarkable job, but a lot of his units are in the 125 to maybe 225 square feet. And what you capture is that entry-level person that wants to be, say, in a hot neighborhood or downtown or Northwest, but really can't afford it, so they're able to get in and live in these sort of neighborhoods. The Arthur Hotel down by the library was recently purchased and renovated. If you go on Craigslist, you'll see that the rents start at about $850, but what you get is a 12 by 12 room. It has a microwave, a sink, a refrigerator, and a little closet kind of put into or bathroom put into a closet, so it's pretty tight. We've also had Footprint Investments, who's big in Seattle, has come into our market. Okay, another trend I've seen is rental surveys. We do lots of rental surveys, and rental surveys have gotten a lot harder to do because nobody has a phone line anymore. So that's definitely been a challenge. We've talked about units with no parking, a big issue in the city of Portland. And another trend I've seen, which might be of interest to some of you, and that is kind of a broker-builder alliance. And there are with all this apartment construction going on, I'm seeing a lot of stuff for sale. So in many cases, you'll have a broker who works with a builder, and the broker finds the land, helps the builder on what unit mix to put in the property. The builder gets the property built. Before the property is finished, they do the marketing, and the broker's been marketing and put the building for sale. Many cases, they'll have a sale subject to rent attainment. They'll do the marketing, and then they're ready to go shortly after stabilized occupancy to sell the building. It seems to work for both, and it seems like it's a nice synergy between the two parties in what the broker brings to the table and the builder brings to the table. The final kind of trend I'm seeing is units for sale. Now, Patrick has identified somewhere around 33,000 units that have either been completed or built or under construction or proposed in the area. And a high number of these are for sale. In many cases, it's kind of soft marketing, and it's not like you open the multiple listing and find it there, but these buildings are being marketed for sale. And I think one of the big reasons is that you've got a gap between value and cost. And we've worked enough new projects to see where the costs are and see that nice, big, healthy gap between kind of total cost and total value. So I think we're going to see a lot of these properties, and certainly a lot of them are currently for sale. Okay, so so much for where we are now. Where are we going? Well, interest rates. What's happening with interest rates? Now, so many people have cried wolf for, it seems like, years and years and years. And every time you go to hear these forecasts, they say, gee, rates are going up. But this year, I have a feeling it's going to be for real. Freddie Mac, there are lots of people that tell you where treasuries and mortgage rates and all that are going to be, but basically, I went to the figures put out by Freddie Mac, Wells, the Mortgage Bankers Association, Oregon Department of Revenue, which I think highly of, and Bill Connerly. And also, Chairman Yellen kind of tipped her hand this last week in suggesting that, gee, maybe things are going to be getting better, mainly because the economy has gotten so much better. Now, where do they say they're going to start raising rates? What is it, 5.5% unemployment? So all of a sudden, we're pretty darn close there. And if you take some of the different forecasts, the average for 2 years from now was somewhere between 3.5 and 4.25 on treasuries. So currently now we're about 2.1. So basically that's 125 basis points. Now, just a seat of the pants ratio on spreads between treasuries and mortgage interest rates might be 150 to 200 basis points. So you do the math. And I'm a believer that there's going to be a spread between, say, treasuries and AAA bonds and mortgage rates and mortgage rates, so that if the treasuries do move up, as people are forecasting, how is that going to impact apartment values? When cap rates are particularly low, say in the 4% range, and you go up to 5%, it's a huge loss. Again, people have been crying wolf, but just from what I can tell, this may be for real. Now, anybody see today's paper, Oregonian? Okay, absolutely shocking to me. Now, over the weekend, I was working on this talk, and I went to the Oregon Department of Revenue forecast, and they're forecasting 6.5% unemployment in the state of Oregon by the end of 2015. So then, Monday or Tuesday, they came out with their revised report, but all of a sudden, today's paper, Oregon unemployment has dropped to 6.3%, and that was from 6.7%. So all of a sudden, the job market's getting better. In addition, I think there's going to be some pressure on wages, which could kind of make the Fed tip their hand and could have an impact on interest rates. Okay, unemployment, I mentioned the figures came out this morning, showed 6.3% in Oregon. Big decline. And if you look at the state figures for job growth, they're forecasting about 2.9%, and better than the nation as a whole. 2.9% translates into about 31,000 jobs in Portland Metro, which to me is, that's a lot of jobs, because we did about 27,000 last year. So, and there's a lot of momentum. The most current job figures seem to be quite favorable. Apartment construction. Many developers are back in the game and trying to get their project to make sense. There's a lot of capital chasing product with cap rates being low. There's a big gap between value and cost. So I think we're going to continue to see a lot of apartment construction. If you add up the figures, Patter's figures show, I believe it's about 8,500 units under construction, 15,000 proposed, and these are not just guesses because he actually itemizes them all. But so I think we're going to see a lot of apartment construction in the next 2 years. Keep in mind we saw 13,000 units the last 2 years. I think we're going to see somewhere in that maybe 12 to 15,000 units the next 2 years. And I think about half of this will be in Multnomah County. I think developers are going to be scrambling, kind of get the project up and going before the lenders get nervous and before there's any softness in the market. So what about vacancies, rental rates, and income? I think the big wild card in the market is how many units are going to get built? What's going to happen with the home ownership rate? And what's going to happen with interest rates? Now, this is information provided by Moody's. I follow this ratio pretty closely because I keep waiting for it to bottom out. It doesn't seem to want to bottom out, but kind of the Moody's figures show it's going to be going back up. And the thing is, if this happens, it's kind of a double whammy on the apartment market in that vacancies can go up because of new supply, but also because of changes in the home ownership rate. I personally think there's so much momentum in the market, so strong right now, that it's certainly going to push into well into the first half of 2015. And I think we're going to continue to see a landlord's market and a strong apartment market. But I think come the end of the year and into 2016, it's not going to be quite as favorable for landlords. I got enough gray hairs to know this doesn't last forever, but I think we're going to see much more moderate increases this next year. On apartment expenses, water and sewer is still the big issue. The bond measures, we've got the new parks replacement bond measure, 68 million, I believe it is, from Commissioner Fritz's office. It looks like that's more replacement. So I don't see a lot of bond measures or things that are going to have a big impact on the apartment market. Sales volume. What's going to happen there? Well, there are a lot of content owners that are happy as can be with what they have. They don't want to sell because there's no place to put their money. So what the brokers tell you is, gee, there's nothing for sale. But I personally think it's going to be a good year for sales volume. And the reason is that I have never seen value so high. And I think a lot of people are going to say, gee, one of the hands were two in the bush and that the market goes up and the market goes down. This may be an opportunity to sell. The other thing I'm seeing is that you get people of a certain age and you get estate-related issues and you get people that it's time to move on and the beneficiaries of the trust and the heirs want to kind of have access to some of that money. And that's a big issue right now. I think those are two markets. The third market you're going to see is a lot of the units being built are being built for sale. Now, I pulled the apartment sale figures through February. Now, not everything's kind of gotten recorded, but there were 32 sales for the first 2 months of the year, 180 million in volume. So the first 2 months of 2015 are shaping up. And if you annualize that, we'd be somewhere around 200 sales and 1.1 billion. So it would be a good year. I personally think we're going to have somewhere in the 200 to 250 sales this next year and volume around 1.5 billion. Apartment values, boy, it's always a tough one because there's a lot of momentum. Interest rates are low, moderate. I think we're going to see moderate increases, continued low vacancies the first half, but I expect some flattening out of values just in light of if interest rates do increase and a slight uptick in supply. I think the real concern is rising interest rates and corresponding increases in cap rates. Okay, so what are the risks? Obvious risks are oversupply. Now, keep in mind that Patrick's figures show 24,000 units under construction and proposed. Now, keep in mind our inventory of units is about 275,000. So all of a sudden, this represents 9% of the total inventory. And even with the good market and household formation and these things, and population growth, that's a lot of units to fill up. Obviously, the second is big risk is interest rates, and at any one of these charts, you see what happens with, say, 100 basis points increase in cap rates. If you go from 5 to 6%, that's a 17% decline of value. Everything else given the same. The final is what happens with home ownership, and when is that going to flatten out? Maybe it is, maybe it isn't, but it's an obvious risk. I think another risk is kind of that rent-to-own calculation. And I mentioned over the weekend, I went to the Mill Creek open house, and I went in this beautiful studio. It was renting for $1,500 per month. And I mentioned that to kind of a business acquaintance of mine who's a Gen Y 30-something. And he said, gee, that's more than my mortgage. So you've got that calculation. I think what's going to happen to the Gen Y people when they decide to have a family? Are they still going to be renters? And what are they going to be doing there? In conclusion, as for the economy, there's so much momentum going right now. And all the forecasts are that it's going to be a pretty good market locally and in Oregon and nationally in 2015 and 2016. The apartment market has lots of momentum. It's very strong kind of as of March 2015. And I think for the most part, we're going to see continuation of those trends. I think the fundamentals are going to be good in 2015, but I think all of a sudden that we're going to see some shift. And that is a shift from a landlord's market and a strong seller's market to an apartment market that is a little more in balance and starting sometime in late 2015 and into 2016. So that's kind of how I see the apartment market currently and some of the trends. And David, I'm certainly open if anyone has any questions.